Friday, November 4, 2022 Market Plus. Here's Shawn Hackett. Shawn, I look at these questions and I'm always amazed that some actually had time. They were done with harvest already. I know you kind of flew in and didn't get a chance to drive. Sometimes you do that when you come up here. Are you surprised at the pace and what that's done to the market? Did you see as much harvest pressure because we've been so fast on harvest this year?
We normally would see harvest pressure, Paul. And we did get it fast because we had very, very dry weather. But, because the crops were short and the ending stocks are tight, it just didn't have the same impact that it would normally have. And I mean, it just sort of kept the market from going higher instead of really knocking the market down as much as we would anticipate. We look at some of the supplies out in West and there's no piles anywhere and the basis is through the roof. And it's just, it's just one of those things. We just don't have enough corn.
Tag Shawn on Twitter. He wants to see all your piles of corn. I think that's what I heard him say. Here's what I'm going to ask him now. We're going to go to your questions. So we'll start with Scott in Augusta, Wisconsin. He asked us on Facebook, with the Fed raising interest rates several times higher, how will this affect land prices in the months and years ahead?
For those buyers that use debt to buy, farmland is going to impact tremendously because it's going to make those loans and the need and the return profile not work for them. If you're a cash buyer, it could still work, but now you have alternative instruments that are giving you very high rates of return, and you may say, wait a minute, why would I want to buy farmland when I can buy an instrument with a lot less worry and just get a high interest rate? So it's going to absolutely positively pull back demand for farmland and for all property at this point. The rates it's been a long time since we've had rates compete for farmland returns or rental returns, and we're starting to see that now.
I guess there's not land reports that I'm familiar with that indicate we're at less supply, but I do see housing data to your point of interest rates. Yes, our prices have been high and they're letting out steam on existing homes, but the price has been ridiculously high and some of that, but it's also the availability. Do you see either home or a 40 going for sale more in the near 6-month future? We'll say 6 months.
Well, I mean, there's always people that have to sell, always. And so in a market that gets locked up the way I see it right now, because the people who own homes don't want to sell because what's the alternative? Go get a loan at 7%? They don't want to sell. The buyer says, I can't afford to buy the current price at 7%. So we have a locked market. But people die, people lose jobs, people move, and they have to sell. And so we're going to start to see these forced selling in the market. It doesn't mean massive overhang supply, but when you are a forced seller in a market where the bidder is not there, you can get significant downside in price.
You could also add in the land discussion. There'll be some people who just can't afford to have the land anymore and do have to make a sale, not because of a death in the family, but just because it got to be really expensive this year.
And I think 50 or 60 different markets are now down 25% from the highs just on some of these small forced sales in an illiquid market of buyers. So it's an impact. It's going to be an impact for a while. The Federal Reserve gave strong indication again. They're going to keep at it. They don't seem to be anywhere near stopping.
But the job market didn't get the memo. I mean, we added 261,000 last month, over 350,000 jobs. We keep adding jobs. Still, 250,000 jobs is a lot of jobs.
It is a lot. Employment is a lagging indicator, and Fed policy effects are lagging. So, it's tough because, you want to think that they work simultaneously together, but they really don't. And jobs numbers will start to weaken well after, we start to see the economic impact starting to show up. It's sort of one of those things. It's a rear view mirror kind of picture, not trying to forecast the future.
Well, Daniel's been watching the cotton futures this week, and he asked us on Twitter, why the big movement in cotton?
Well, certainly, cotton got hit so very, very hard, and because it got back to that good level relative to the Chinese price, it's bringing some business back in. The other factor is when you hear the talk about China, about opening up their economy, we know what that looks like. It's quite a boomerang of demand, at least for a little while. And remember, there's no supply. I mean, this market's gone from $1.20 to 70 cents, and you look at the balance sheet, and there's just no supply. So small changes in behavior or perception when you have no supply can have these. Cotton's lost half its value twice this year, and it's rallied back to the highs twice this year. So that's a market that is just really on the edge.
Okay, we're about to the time of year when I start asking the question about acreage. Soon we'll get that. At what point At what price point does cotton buy acres or have acres taken from it because there's something more profitable somewhere else?
Well, I mean, we have to get to that point. Right now, cotton would not get the acres that I believe it needs, given how tight the market is. I mean, I think it would, 70 cents is not going to cut it against competing prices that we see right now. I think, if the competing prices are where they are today, come the time that decisions are made, I think cotton prices would have to be considerably higher, maybe in that 80 or 90 cent range, to provide the economics to get that ground planted.
Let's ask 2 questions from Aaron. You ready for question 1?
All right.
Here's Aaron's number 1. Some of us haven't had more than a few raindrops since the beginning of August, or longer for others. He's in northwest Iowa, from Ocheeden. Can a slow transition to El Nino sometime in 23 arrive with proper moisture and time to plant the western corn belt? You talked about the wheat belt in the show. Now you're going to be talking about the corn belt. What's the answer for those folks?
I believe that it will. The cycles that we looked at going back to 1850 of 2-year La Niñas that move into the 3rd year are very clear that we'll move into an El Nino kind of pattern. When we're already starting to see significant moisture out west in California, we're expecting to see some significant moisture next week in the northwestern area. So we're starting to see the weather pattern shift and provide some moisture that we haven't seen in a considerable amount of time. It doesn't happen overnight. It's not, you don't flip the switch and it just turns everything on, but we're starting to see the slow turn of the wheel. And I think that that's a sign of better times to come.
Well, and we need some water for navigation.
Yep.
I mean, the Missouri is no longer, they don't regulate it normally after November traditionally, but this year is extenuating circumstances. But the farmers I talked to this week when we were out visiting, they were just like, any rain we get just sucked up in like a sponge. So it's going to take us a little bit in some of these areas that are used to rain that haven't had it.
We would hope, that you get some kind of a big enough snowpack that when we get the thaw, you'll get enough runoff to create that river flow that we're looking for. We're looking for a very early spring this year, Paul, not a late spring like last year, an early spring. Like we think we could see spring-like conditions in March based upon our cycles. And so if we have good moisture and we get an early start to the planting season, we may have the potential for the first time in 4 or 5 years of having really, really big crop potential.
Well, you heard it here. We'll keep Shawn on the point there, and we'll ask him when he comes back. Another question from Aaron. Shawn is about cattle. Can very bullish cattle fundamentals for next year overcome continued economic fears and potential demand destruction? You didn't talk about demand destruction so much in the show, but you did mention some of these other things.
I think it eventually will override the demand destruction factors that are clearly coming. I don't think, as we said in the first part of the show, it can do it in the 4th quarter. I don't really think it can do it in the 1st quarter. I think we need to get to the latter part of the 1st quarter into the 2nd quarter for the lack of supply of animals. Remember, we get the rains, we get the pasture growth, we get the herd rebuilding phase, all that kicks in, and I'm thinking by the time we get to that point, we will have gotten through the worst of the demand destruction and we'll be on the mend on seeing some better demand ahead. So I would say not right away, but certainly by spring onward, I think that we could be in a very, very positive supply-demand situation for higher prices.
Shawn says stay tuned. Got it. Okay. We're going to finish the submitted questions. Kelly in Primgar, Iowa. He wants to know, Shawn, how positive will basis get on corn? Will it be strong in the western corn belt?
Well, there's not a lot of corn out west, and there's not going to be a lot of corn out west, but everything's about expectations. If we have an expectation that we're going to have a big second corn crop in Brazil, if we have an expectation that we are getting off to a great start, fast corn planting, good crop condition, good moisture in the ground, then the buyer is going to be less willing to panic and provide that basis if he thinks that just a few months down the line there's going to be significant corn excesses. So I think we can have some strong basis until we get that answer, because it's going to take a while. But I would be very careful about waiting too long to lock in a strong basis, because at some point when the light goes on that the big crop's finally coming, the basis is going to cave in really fast.
Because they'll just sit and wait.
They'll sit and wait.
Got it. All right. Well, I'm done sitting and waiting. I'm going to let you go.
Thanks, Paul. It's great to be here.
Good to see you, Shawn. Thank you so much. Appreciate it. Next week, we are going to look at the scope of the latest HPAI outbreak, and we'll have John Roach talk with us about the markets. I'm Paul Yeager. Thank you for watching. Have a great week.